why people shouldn't buy long-term care policies.
It's not for everybody. Maybe they have a health issue or they don't have the assets to pay for long-term care insurance.
We end up explaining why they shouldn't buy a long-term care policy. There's quite a few reasons why people shouldn't buy this.
You have to pass medical underwriting and you have to be below age 79. There's an age requirement and a health requirement. People come to us and it's just they can't do it. It's not right for them.
Eric, you and I, we spend all day talking about long-term care insurance with people all over the country. And I think people think that we actually spend most of our day like talking people into long-term care and buying these policies. We're going to make a video that's totally different today about why people shouldn't buy long-term care policies. So first I'll answer the question, do you actually spend all day talking people into buying this?
Yeah, yes, to be honest, yes, but it's not everybody. I mean, because long-term care insurance, like any financial planning tool, it's not for everybody. And so there is a certain segment of people that long-term care insurance or hybrid long-term care insurance is appropriate for, but there's also a big segment of people where it's not appropriate because one, that they have a very short time horizon. Maybe they have a health issue or they don't have the assets to pay for long-term care insurance. So there's numerous reasons. So that's kind of what we're going to drill down on today is who should not buy long-term care insurance.
Yeah, and the reason why I kind of started the video off that way is like I feel like I actually spent quite a bit of time on the phone with people who we end up explaining why they shouldn't buy a long-term care policy. And so, like you said, we're going to talk about that today. There's quite a few reasons why people shouldn't buy this. We're going to kind of go into those one by one. I guess let's start with first of all, a lot of people want to buy it, but they can't because they're just not healthy enough, right?
Yeah, so to get hybrid long-term care insurance or long-term care insurance, you have to pass medical underwriting. So, and you have to be below age 79. That's another, so there's an age requirement and a health requirement. And it's often where people, they come to us after the car accident, so to speak. So they come to us after they're starting to have memory problems. They come to us after they have insulin-dependent diabetes, or they just had a stent put in, or they had cancer last year. So there's numerous reasons where people come to us and it's just they can't do it. It's not right for them. Or the premium's going to be astronomical because they're going to be put in a very high rate class. So health is a big reason why, it's not appropriate for some people. What are you seeing?
Yeah, well, and then great point. There's the flip side of the coin. A lot of people are very healthy and they may think they don't need a long-term care plan. I mean, like you always say, you tell people you know your health better than anyone. So, there's probably a segment of people that are so healthy and have such good longevity and family history that they might be throwing good money after just a small life insurance policy. We'll call it good money after bad if they're, kind of fall into that diagram.
Yeah, I had a guy, that's a great point, because I had a guy, he was kind of the stereotypical kind of West Coast, Northern California guy, excellent health. He's a hiker. He still has a lot of muscles at age 70, very active and on no medications. And he has assets to kind of self-insure the risk if something does happen. But statistically, no medications in, I think it was late 60s, early 70s, he's probably not going to be like somebody who does need care for years and years and years because he has strong joints, he has muscles. Because the longer claims that I've seen are mobility claims. Something happens to their knee, they're obese, the claim just lasts forever. But for people who have excellent health or are really active and strong, that could be the type of person who just, maybe you don't need the insurance. Maybe just kind of, bet on yourself and self-insure your risk.
Yeah, yeah, and that client was maybe 70. Let's like rewind. Someone, let's say they're watching this at 50, but they kind of
Yeah.
see that same runway for themselves. What they need to think about is opportunity cost. Versus buying that hybrid plan. Let's say putting $100,000 in over 10 years. What if they, like you say, invest in themselves and take that $10,000 and put it elsewhere? So for a lot of people with the absolute highest tier of health and you kind of see it in your parents and your grandparents too, assuming you live a similar or better lifestyle than they did, you may be able to beat the odds, so to speak.
Yeah, that's true. And so, I mean, you know your health better than everybody, like you said. And so you just have to make an educated guess because I mean, there's no perfect answer. You might make the wrong guess, um, or you might make the right one, but you have to kind of just weigh the costs and benefits of your health, your parents' health, your current health, your BMI, your activity level, and just make the call. And it also has to do. There's an asset level qualification too, because
Yeah,
another
income
reason
and
somebody
assets, both really.
yeah, because sometimes people they come to us where they're barely getting by. They don't have any money left over at the end of the month to pay any extra long-term care insurance premiums, or their assets are below maybe $200,000 where they don't have a whole lot to lose if something happens. So if something does happen, they can spend down their assets to zero relatively quickly and then get the Medicaid program to.
Yeah, I mean, they need to be spending their money on, having an emergency fund, paying off debt, things like that. They shouldn't buy long-term care plans. So that's another one. And then there's kind of like there's a subset of people that rightfully so, they don't trust insurance companies, I mean, go back and look at homeowners insurance, go look at health insurance, look at any insurance, and there's sort of like this disdain for insurance companies. And I think you and I kind of fall into that bucket a little bit ourselves, don't we?
Yeah, and we do because we've all have fought with insurance companies over the years. So, that's kind of like that was one of our core missions is to we hand curated these blue chip companies that don't hassle people when claim time comes. So we've filed claims with all our companies and there's some companies out there that want us to sell their products, but we don't trust them. And so we don't expose our clients to that risk because who wants to be hassled with an insurance company when you're 85 years old? So if long-term care insurance, if you do decide it is appropriate for you, you can rest assured the companies we work with have been hand curated. We have seen them decades of of paying claims and treating people fair. So that's very important for us.
It is. And, I don't know what the exact number is, but between us and our team, you and I have been a part of many thousands of long-term care sales over the years. Our YouTube channel is going on like well over a decade running now. People can go back and check. So we've seen lots of claims. You navigated what, an 8-year claim with your mom. So, we kind of know what to look out for when we're, like you say, curating these companies. But I want to tell just like another story, about another kind of almost like a hybrid, to reuse the term. Had a couple where she had really good longevity and his family had a history of heart attacks and, sort of predeceasing their spouses. And so for them, it was kind of a no-brainer for her to get something and him to not do anything at all. And so, if you're a couple, your decision process is going to come down to your individual health. You don't have to do the exact same thing. We actually see that all the time.
Yeah, and that's a great point. And that very example that I gave, that West Coast client to his wife actually did get a long-term care policy because again, women file 69% of all claims are filed by women. And so that was a good fit for them because they put the premium dollars where the highest risk was, and it was with the wife because she wasn't quite as of an athlete as he was, and she's a female. So that's where they chose to ensure that portion of the risk. And I was thinking about this the other day. Is like I was actually went for a run, and I was just kind of thinking about the business. What is LTC's uh, kind of DNA? And like, both you and I, Drew, we don't like insurance. I mean, I don't like paying insurance premiums. I want to buy as little insurance as possible. And that's really what we want for our clients. We don't like insurance. We don't want you paying insurance premiums. So we're really going to kind of drill down with you and see if you need to buy any insurance. And if you do need to buy insurance, we want you to buy as little as possible so you can use any extra premium that we can save to and keep it in the market and you kind of, grow extra premium dollars that would have gone to a higher insurance premium, keep those rolling for you in your investments. So there is a balance between insurance and investing, and we skew more towards the investing side.
Yeah. Yeah. I mean, so there's certainly a subset of people out there who would prefer to keep their money in the markets. They don't like the sort of slow and safe approach that insurance offers. If you want to roll the dice, that's a completely understandable situation. We see people do that every day. On the other hand, of course, being insurance salespeople, we're going to say this, but if it's reasonable to take 5 or 10% of that portfolio and lock it into something that's going to be secure, there may be a counterpoint. But, those are the main reasons why people don't buy this. And again, most of them make rational sense. You're not healthy enough, you're too healthy, you need the liquidity because you don't have enough money, your longevity needs. There's just a lot of reasons that are valid to not consider long-term care plans. And that's what we wanted to kind of help people think through. So I'll tell you what we're going to do, Derek. We're going to put on our website, and I'm going to link to it in the show notes, a LTC Fit score. It's going to be a worksheet you can go through, just answer a couple questions, and it's going to give you a score of how likely are you to need a long-term care plan versus just self-insuring.
Yeah, that's a great idea. Yeah. And, there's if you do want to go that self-insure route, there are some, we call them hybrid lifetime income annuities where you can use IRA money to put a chunk of money in there, and it safely grows to popular indexes like the Nasdaq, the Dow, the S&P 500. And then at some point, you turn on a lifetime income stream and it's going to pay you X number of dollars for as long as you live. And this is for anything retirement. This is to, pay for bills, go travel, just have fun with in retirement. It's almost like an extra pension coming in. But if you ever need long-term care, there's several companies that will 2x the payment for 5 years. So that's something that if you want to find, something kind of a compromise in between, no insurance and then over insuring, that's becoming increasingly more popular strategy to kind of self-insure the risk with these lifetime income annuities. And we definitely can send some information on that too. Um, but yeah, that health score too, that will kind of help guide them and help them determine if they do want some insurance or if they maybe want to self-insure the risk.
Yeah, because we made a really popular video on this topic a couple years ago, and we felt like we needed to update it for 2026 because, the markets change, interest rates have changed since then. There's just a lot more options that are alternatives to long-term care. The stock market's up 50% since then in some cases. So there's just a lot more options on the table now. And we like to have a candid conversation about long-term care. We're LTC Tree. We compare all the major options, whether it's insurance, annuities, self-insuring. We can spitball ideas with you on any of those things. And so I guess we can wrap it up. What do you think, man?
That sounds good. Hey, well, we appreciate you guys watching the video. Feel free to call us direct. Often Drew and I or our assistants will pick up. Happy to talk with you. I talked with a lady today from Roswell who wanted just to talk some annuity shop about her existing annuities. And if you want to just basically just fill out a form on our site to have us contact you at your convenience, you can go to ltctree.com/YouTube. So
Yep,
anyway,
sounds
thanks
good.
for
We're both
watching,
licensed
guys.
in all 50 states, so no matter where you are, we can have a candid conversation. So, all right, Derek, we'll catch you next time.
All right, see you guys.